Hello everyone and welcome to episode number 10 of the Candlestick course for beginners. My name is Mr. Crypto Tracker and I'm going to teach you how to trade with candlesticks. Before we start this episode, please make sure to subscribe to the channel if you didn't do it so far, and also turn the notification bell on to get notified when a new video comes. In this episode, I will discuss an intriguing pattern known as the star. This pattern is a star when it comes to calling top and bottom reversal. So you're going to learn about the criteria for morning and evening star, how morning and evening stars call bottom and top reversals, and how volume activity intensifies star signals. A star is a small real body, thinking of something like a spinning top, that gaps away from the long real body preceding it in an uptrend or a downtrend. As you can see here, this one, there is a gap between this candle and this one, and also here we have a gap here. The third candle in the formation also should gap away from the real body of the star, leaving the star's real body isolated at the top or bottom of an uptrend or downtrend. So here you can see another gap between the star and the next candle, and also here you can see this gap. But again, like what I explained about the crypto charts in previous episodes, for this pattern, again the story is the same, and in crypto charts maybe we cannot see these gaps between the star and the two other candles. Ideally, the real bodies should not overlap, although the star's real body can intrude into the prior candle's shadow. The star's real body represents a tug of war between the bulls and bears. So it's a similar concept to that of the harami, a strong move in an uptrend or downtrend, directly followed by an indecisive time period. The star represents a stronger initial surge in the prevailing trend, however, before opposite forces arrive to put it down. The star is the middle portion of two candle patterns called the morning star and evening star. As you can see here, this is the star which is between the two candles. So this is morning star and this is evening star. The morning star is a bottom reversal pattern. And just as the morning star precedes daylight, the morning star candle pattern potentially precedes higher prices. Three candle lines form this pattern. First, in the context of a downtrend, as you can see here, imagine we have a downtrend here. A long red candle develops, the first candle. In this case, I said, let's assume this candle shows a daily candle, but it can be in any other time frames. It doesn't matter. So a long real red candle develops, assuring the bears that they continue to be in command. Then a small real body or a spinning top appears, as you can see here, gapping down at the open of its session and delighting the confident bears. The star completes its formation in a tight price range. As you can see here, this is the star candle and the range is very tight here. Without rising back to close into the prior red real body. So the final candle of the morning star pattern is a green real body that moves deeply into the first session's red candle, as you can see here. This panics the bears, and the green candle proves that the bulls have taken control and reversed the downtrend. Let's take a look at a chart to see how we can identify a bullish reversal pattern, in this case the morning star. So we have a clear downtrend first, and around the previous support, as you can see here, it would be a support, actually it's a previous resistance which acts as a support this time. In this vicinity, you can see a star forms, and after that we have a green candle, which a long real body. And here you should be cautious because you find this pattern here, and you should be ready to enter to a long trade. So upon the start of the next candle, you can enter just one tick above the close of this green candle and put your stop loss just below the low of the star. So this way you can enter to a long trade. Actually, this is how you can trade the morning star pattern. The morning star's bearish counterpart is the evening star, as you can see here in this slide. 3 candle lines makes up this top reversal signal. In the context of an uptrend, we had an uptrend before, a long green candle appears, convincing the bulls that the rally will continue. Then the star appears in the form of a small real body that classically gaps up from the green candle's closing price. There is a gap here, but again, I should remind you, in the crypto charts, you cannot see this gap. Usually there is no gap. So the star's real body, it can be either red or green, it doesn't matter. The star real's body remains isolated as the next candle confirms the trend top by gapping away from the star and producing a long red real body that pushes into the green candle real body. As you can see here, again, there would be a gap here, but it's not it's not necessary to have a gap, but if there is a gap, that's better. The final candle seals the fate of the bulls as the bears grab control and push the market downward. Let's take a look at the difference between the evening star and bearish harami pattern, which I explained that pattern in the previous episodes. The biggest difference between these two popular candlestick pattern is that the evening star forms in 3 candles, while the harami forms in 2. And additionally, the high point of the evening star pattern is the 2nd candle. But on the other hand, the high point of the harami is in the 1st candle. This is the 1st candle of the harami pattern, and here the highest price is in the 1st candle. But in this pattern, in the evening star, the highest price is in the star or in the 2nd candle. But let's see how you can trade evening star. So upon you identify this pattern on a chart, you can enter to a short trade after the close of this 3rd candle. You can enter just one tick below this close and also put your stop loss either above the high of this red candle, or you can put it one tick or a little bit above the high of this star one. Let's take a look at a real chart, which is the Bitcoin chart. So here we have an uptrend, and then the price reached to a previous resistance, and you can see the evening star pattern forms here. So in the next step, we just explained, in the next candle you can enter to a short one tick below the close of this candle and put the stop loss either here or above this one. And here is the result. You can see when you enter to trade here, it continue to go down and hit your target. One point about this pattern is if the middle portion of either the morning or evening star is a doji instead of a spinning top, we call the pattern morning doji star or evening doji star. As you can see here, this star, if the star candle is a doji, then We call it morning doji star and evening doji star. So let's summarize what we learned about the morning star and evening star by comparing the differences. So in the morning star appears at the bottom of a downtrend, while the evening star appears at the end of an uptrend. In the morning star, a combination of 3 candles, bearish, the next one either bearish, bullish, or neutral, and the third one is a bullish candle. But in evening star, a combination of 3 candles, we have a bearish, then the second one can be bearish, bullish, or neutral. By bearish or bullish, I mean it can be either a green candle or a red candle. And the third candle should be bullish. In the morning star indicates that sellers have failed and buyers are dominating the market, while the evening star indicates that buyers have failed and sellers are dominating the market. And finally, from significant support, the morning star can form from a significant support level, while the evening star can form at a significant resistant area. So from this episode and the previous episode, we can conclude that the valuable Harami cross and the star patterns offer you more reversal patterns to place in your trader's toolbox. And also your ability to recognize these patterns on charts of any time frame will add to your trend forecasting and money management skills. I want to put more emphasis on the money management part, and this is most important part of your trading journey. You have to have a sound money management system. In case you have no idea how to develop a money management system, I recently published a course on Udemy. The title is Money Management System for Traders. In this course, I explain in detail how you can develop a money management system for your trading business, how to calculate the optimal fraction of capital to be risked in each trade, and also how to develop a trading journal to track your profit and loss. I will put the link in the description. You can go to this link, and if you scroll down, you can see here the first 2 episodes of this course is free. I highly recommend you to go and watch these 2 episodes, and then you can better understand how much you need to have a money management system. So please go to different charts and try to find all the patterns you learned so far and see how you could trade these patterns. Have a good time and see you in the next episode.